What is going on, you guys? Welcome back to another YouTube video, guys. This is going to be stunning. This is going to be great to learn, guys. I just want to say welcome again to the channel. If you haven't been here already, let's go ahead and jump in, guys. We're going to be learning fair value gaps. If you apply this to your trading, oh my gosh, you are going to be oh my god, it's going to be like you're going to be making profit. You got to apply this in your trading. This is going to be huge for you. All right, guys, so we're on the charts here. As you can see, I highlighted this area. We're only going to be looking at this candle, and this, okay? These three candles that are inside this purple zone. I'm going to show you exactly what this fair value gap is and what this means, guys, okay? If you implement this in your trading, it's going to be huge, guys. It's going to be huge. It's going to give you good entries, good knowledge in the markets, and great opportunity, okay? So let's go ahead and just get started. I want you to ignore every other candle besides this zone here. And this 1, 2, 3. These three candles. That's all we're looking at. I'm not going to make this too overwhelming. It's really simple. Okay. So as I zoom in here, we're going to look at the first candle in this zone, as you can see. Okay. So we're going to look at the top part of the wick. Okay. And the third candle. Let's look at the bottom part of the wick. So basically what a fair value gap is, I know it's confusing at first, but hold on. A fair value gap is just a middle gap of the three candles, okay? It's just the middle gap. How do we find the middle gap, guys? Okay, we're gonna look at the first candle at the top part of the wick here. I'm gonna go ahead and press that, draw a line out, and when you draw on that line, press shift, guys. Shift, okay? Because otherwise, if you don't press shift, it's gonna go like crooked as heck. You see that? Crooked as heck. But anyway, we're gonna go ahead and press shift. Boom, just like that. So we got that lined up right there. And now we're going to go ahead and do the same thing. There's nothing to line up. We're not going to do this one. We're not going to do the middle candle at all. Okay, we're only going to do the first one and the second. So we're going to go ahead and again, select the bottom part of that wick. When you press control, it brings you right to the bottom of the wick. Okay, and then you're going to go ahead and slide out. Press shift. Boom, there it is. This is going to indicate, guys, a fair value gap. So let me go ahead and take this and highlight all that we just did, okay? As you can see, boom. There is our fair value gap. Price, guys, will always, not always, but most of the time come back to this area. And this could qualify as a good entry method, guys. Fair value gaps could be used in all kinds of stuff in your trading, okay? All right, so now we're going to keep looking at this area, but I'm going to bring this area out a little bit more. What did price do, guys? For this little fair value gap, we just draw it out. What did price do after those three candles? It came up, came back down, this wicked, right in a fair value gap, guys. This is huge. Now, look at set limit order. A limit order is, if you don't know what a limit order is, just you're putting an order at the market. When price hits that level, it's going to go ahead and put you in. So the stop's going to go ahead and go not at the fair value gap. Stops will go either at the low end of fair value gap, at a swing low, or just below the fair value gap. Okay, just like that. Perfect. Now our targets, we go ahead and target 2 to 1, guys. If I could get it on there. There it is. Boom. A 2 to 1 trade right there. Look at that. 21 handles. Boom. Fair value gap on a 5-minute time frame. Look at that. There it is. So if you actually did see this in real-time markets, okay, bought a limit order here, price will actually take us inside of that gap, okay, fill it in, and now look at this, price takes profit, okay, as you can see, boom. This is a great method, guys, to learn and really implement in your trading, guys. This is huge. Now let's go ahead and look at a bearish version, guys. Alright, guys, now we're going to look at a bearish version. As you can see, we have a 1, 2, 3 candles, okay, as you can see. And we're going to identify this middle candle. Now, let's look at this middle candle. And it looks like there's going to be a gap here. We're going to start with this part of the wick, drag this out, and same thing here, okay? Just like that. Boom, there it is. Now we're going to go ahead and highlight that area, okay? Boom. There is our fair value gap, guys. This is going to be crazy. Now, guys, okay, what is the market going to do? Right when you see this in the market, okay, You see, oh, there's a fair value gap. Now let's go ahead and see if we can get an entry. We're going to go ahead and put our stops either swing high, or we could go ahead and put them slightly above our fair value gap, just like that. And I'm going to go ahead and target, let's see. Okay. And now let's go ahead and see what happens in the markets. As the market comes up, will it tap in? Boom, it tapped in right there. As you can see. Now, will we hit right here? Boom, we hit our target. As you can see, there's your trade. That is a fair value gap trade, guys, okay? So when it comes to fair value gaps, guys, the market is going to open up opportunity. When we see this fair value gap, it provides opportunity for markets to come back in that zone and fill that in. It could fill it in all the way. So this wick could go all the way up to here, or it could go halfway or not at all, okay? Or it could just leave it open. Okay, so there's 3 possibilities. So if he did actually put a limit order here, a limit order, again, remember, is when you place an order that when the price reaches to, it puts you in the market. If you do that, okay, it's likely to respect this area, acting as support off of it, okay, or resistance if you're bearish. As you can see, is acting like as resistance. Comes down, boom, okay, hits our profit. Look at that. And now after that, you can just trail your stop loss. After it hits your target, guys, look at this. I go ahead and risk-free trade. Now just trail your profits, guys. Look at this. Just trail, take some profit there. Look at it. Take more profit there. And now if it gets really low, then you can go ahead and trail like 1 candle each. Now we're trailing big time. Look at this. Let's trail a little bit more. Look at this. Oh my gosh, guys. Look at this. It's crazy. We just keep on trailing for profit. Take that profit. It's a gimme, gimme. And yep, there it is. Then we would stop out right there. As you can see, I mean, shoot, if he did that, what would that be? So if he did actually short right there, look at that. You're looking at like if you're trailing and I hit your stop around here or so. Look at that. A 1 of 4, guys. We're looking at like 1 of 4. So guys, if you could use this method, this fair value gap method, super simple, relatively easy. And just know when it comes to the markets, you're not always going to win every time, okay? Just know that. Not every time, but it's a process. It's about discipline and mindset, right, guys? So with that being said, that's it, guys. Here's fair value gaps. All you need to know about them, how to use them, when to put your entries and your stops, guys. And you learn this in what? Hardly any time. This is crazy. It's awesome. Great thing to implement in your trading, guys. If you don't hit that subscribe button right now, what am I going to do, guys? This is awesome info. Subscribe, hit that like button, guys. Hope you have a great rest of your day.